subject, which we will find out what it is, since it has recently changed his life. Please welcome Wayne Kawalka.
Morning, Toastmasters. So my speech project is to do a metaphorical description for you guys. So I'm going to start off with, how many of you guys know what a shopping portal is?
A what?
Shopping portal. So the way shopping portals work is you go to this website, you click on their hyperlink, and you go to the website and you get like, I don't know, 1% or some even 10% off. It's a cool little tool. If you guys don't care anything about what I say after this point, go out and check the shopping portal. It's a good thing to use. Not a lot of people use it, but it's a really easy way of getting some % off your purchase, every purchase. So the reason I woke up today is not to go to work. It was to talk about life insurance. And it's not term or universal life insurance like how we normally think. And Alan, you're going to love this. This is really cool. So term life insurance is like, you buy it for a few bucks every paycheck, and you die, your family gets like $1 million back. That's term life. That's a traditional life insurance. There's also universal life insurance, which is pretty similar. I'm not here to talk about any of that. I'm talking about whole life, fully loaded insurance. So what this is what all the cool kids are doing these days. They're very wealthy are doing this system called infinite banking, or being your bank yourself. So what you do is you stuff all this money into this life insurance program, and then you're able to withdraw the money, add a loan to yourself, and basically use this money however you want. So I use myself as a guinea pig. The other day I got approved for our life insurance program, and I put $50,000 of my money into this program. So now I get this yield back every year, which is a lot safer than bonds. I mean, nothing's guaranteed in life, but this stuff is pretty much 99.999% guaranteed. So I get a yield of 5% every year. The cool thing about this is it's 5%, and because it's life insurance, it's tax-free. So essentially it's like an 8% gain. So that's what you're getting. And I go out, and my plan is to take this money in here and invest that money. And now I can invest it at a rate of usually about 4 to 5% is what I can usually take this money out as a loan. So you're thinking, okay, I'm making 8% on this life insurance in the front end, and then I'm going out and investing it and paying a loan on this money at 4%. But really it's a business loan, so you can deduct it off your taxes. So it's really essentially like a 3 to 4%. So the magic is in this delta. I'm making 8% on this money, but I'm really paying out 3 to 4%. So 3 to 4% delta. And then I can do whatever I was going to do anyway. So the reason I brought up the shopping portal thing in the first place is kind of like you're going to go out and spend $100 at Macy's. Go through the portal, click on the link, so you get 5% off Macy's. It's kind of the same thing. And this is what all the cool people are doing these days. It's called the infinite banking. You can Google it, do a lot of reading on it. But it was pretty cool when I first discovered it, because I'll go over the pros and cons. I mean, obviously you get this 4%, 5% delta on top of what you're already doing. That's the obvious thing. But when this money's in your life insurance, now creditors or lawsuits can't get at it. So it's essentially like locked up money. Nobody can sue you for it. The other good thing is that you can keep putting money into this every year, every year, every year. So it's very flexible. If you make a lot of money one year, you can make another policy to account for that money. So basically you're running all your money into this life insurance thing and out the back end. I can help you. It's a little complicated, but that's pretty much the gist of it. Now, I want to go over the cons of this life insurance thing. The bad thing is that when you put the money in, you're not going to have access to all the money right away. So for example, I'm putting $50,000 of it today, for example. I can only put out like about 70% of it day one. So if I need to go buy an asset that's $35,000, that's the most I can take out of the policy. In year 3, I have power to go after 90%. At year 6, that's when I have full power, I can get all out. So if you have a temporarily, you're not able to go after all your money up front. So the money's in there, but it's kind of locked up you're going to have this sort of little dip in the capacity to get at these funds. That's the only bad thing, in my opinion. Is there any questions? I know some of you I've lost, but I want to answer a couple questions just so I can see where you guys are at. Good. Delta is a term that is used in a lot of tech people. Like, what's the difference? The delta, the triangle. What's the difference between going with this and this? Yeah. So if you bought this sandwich here for $5, a sandwich here for $10, the delta. It's just a cool way of saying the difference. Difference is 5. Alan.
Where's that 4 to 5% coming from? Is it stocks they invest in? Or
Yeah, so these are the institutional buyers. These are the big insurance companies that go out and buy like these very high-end assets that they're not getting a big yield, but it's very secure. The only time that they didn't pay out on the premiums was like during the war, because they decided to donate the money to the war effort. Very secure. It's a contract. So with that, I'm going to leave you guys with a flyer here for a shopping portal, because I know you guys some of you guys don't care about life insurance, but please just go to the shopping portal thing and save 5% on your next purchase. Thank you.